I'll try to get it out tonight. I usually can, but we'll see. So let's see. So this will be due. I don't know the due dates for all these up there. I'll move this over for a second. What's today? 30th. So the due date is April 7th. And the exam that I'll set out later will be due on April 8th. That'll give you a week to do them. So this is for at the end of class. I'll send that out. Okay. Any question on that? Okay. So yeah, these are the two things we're going to do today. And then this one I'll send out later. Okay, let me save that. Oh, do I have it saved as the right thing? $330. Yep, that looks right. Okay. All right. So let's pull up the handout from last time. Again, I think we've done all the way up through. Yeah, so we're on page 11. I'm going to talk about the multi-step income statement. And I am going to switch cameras so I can pull my calculator out. Okay. So I think I talked about this last time. So this is the order of the multi-step income statement. It's kind of like the classified balance sheet where you put things that are similar together. And so that's kind of what we do. And the way you remember this is SCOOT. SCOOT. So SCOOT. So you remember the multi-step income statement. And some of this you've already done. If you kind of look at this, sales minus cost of goods sold equals gross profit. That's really the same thing we did here. Sales minus cost of goods sold, gross profit. It's the same thing. This is going to be a little bit, a couple different things in there. So anyway, you start out with the sales, and that's our S. For the cost of goods sold, and the operating expenses, and these are something kind of new. They're basically the selling expenses and administrative expenses. These operating expenses are usually the really big numbers. These are the big expenses usually. So let me do something here. These are directly, I don't want to highlight it. Hold on, let me turn the highlighting off. All right, who cares? I hate this. I hate when it guesses what I want to do. Oh, you want to do the whole word? No, I don't want to do the whole word. Okay, so these are things that are directly related to the business. So the selling expense, whatever you do to make the sales, administrative costs are like for president of accounting, among other things. So these are directly related to the business. Oh, we don't want to do that. Okay, down here, these are other revenues and expenses. Let's make those, I don't like gray. Okay, and these are things that are what they call incidental to the business. We'll talk about that in a second. Okay, so these are expenses that you basically have to have for whatever business you're running. Whereas these down here are what they call incidental to the business. And I'll talk a little bit about it. Okay, so incidental to the business. What does that mean? When they talk about it in terms of the multi-step income statement, what they're talking about is, well, here, I'll give you an example. Let's suppose you're running a pizza shop, a pizza parlor, a pizza restaurant, and you make pizzas, you sell pizzas, deliver pizzas, and all that kind of stuff. Okay, you're probably going to have a bank account, right? Because you're going to sell the pizzas, all the cash you get for the pizzas, you're going to take to the bank and deposit it. You're going to have a bank account. All right. Now, you might get interest on that bank account, right? So maybe the way it's set up or whatever, you get interest on it. And you do get interest on it. But that's really not what you're in business to do. You're not in the business of trying to collect interest. You make your money, selling pizzas. So even though it happened, it's not really part of what you're doing. And so interest is one of those things that is incidental to business, whether it's income or interest expense. It's incidental. It's not really the main focus of your business. Say. You may also have a delivery car, or truck, van, whatever, for delivering the pizza. So let's say you have a delivery car. You buy a new delivery car and you sell the old one. Now, you're not in the business of selling cars, but as part of the business, you bought a new car, so you're selling the old one. That's incidental to the business. You may have a gain or a loss on the sale of it, but it's really not what you're in business to do. You're not in the business to sell cars. So those are things that are, while they happen, undoubtedly they happen, they're not really what you're in business for, good or bad. So we kind of separate those out and say, look, this isn't really part of necessarily making the pizzas and delivering the pizzas and selling the all that kind of stuff. This is stuff that's incidental to it, that we may have some other revenues and expenses, other gains or losses or whatever they are that come into it. So that's where that other revenues and expenses account. We're kind of separating out those things that are not really part of our normal business. And what am I doing? Okay. So that's what these are. These are those things that are not necessarily what we're in business to do. Okay. And last but not least, we have our taxes. And I think I run out of. colors we can actually see. Is it? It's a little bit. I don't know. I will go back to yellow. Okay, so that's our scoot. And then that leaves us with our net income at the end. So I guess if you want to call it Scooty, that's fine too. But the income at the end is, it's the same income we had before. And by the way, this is really the same as we did before. This is the same as when we did sales minus expenses or revenues minus expenses. It really is the same thing, except that we are splitting up our expenses. We basically split the expenses up into 4 categories: cost of goods sold, operating, other, and taxes. So it really is exactly the same thing we did before, except that we're splitting them up into different categories. But it really is the same thing, though. Is the sales, this is what comes in. These are what's coming in. No. I know how to turn this stuff off. Well, here we go. Let's put it over here. So these are all things that are coming in. And these are all things that are going out. So it really is exactly the same as we did before, except that we're splitting it up into different categories. So sales came in, costs, expenses went out, same exact thing. Just putting them in different layers to kind of group those things together that are similar. Now, let's jump in and do one. Let's jump in and do it. So this is page 12. And on page 13, we have the answer sheet. And I think I'm going to close this. What I'm going to do. I'm going to pull up 2 of them and give me a second. This is going to, this might get ugly. Okay, I feel I'll have this on this. So on this side, I'll have the, oops. Well, yeah, I'll do the same thing on this one. I'll get there eventually. Okay, so this is for problem for page 12. And over here, I'm going to have the numbers. Hopefully you guys can see those. Okay, so I'm going to say this is problem 12. And we're going to do this, I'll make these in capital so we can see them a little better. Scoot. I'm not sure about the spacing on these. I might have to change the spacing, but. So I just got Scoot written down the side here. I don't need that much space for it. I could probably shorten that up a little. But the so there's Scoot. I'm gonna bold my Scoot. Okay. So this is problem 12 then. So here's the data I'm going to be using. So what I'm going to do is just go ahead and start bringing the stuff over that we need over here. Okay, and so the first thing I'm going to do is the sales. So we'll do that first. Okay, so on here we have sales revenue down at the bottom. Hey, oh, I'm in the wrong. I'm using two different word programs. Okay, so here's our sales. So sales revenue. So I'm gonna put that in here. Sales and revenue are the same thing. Put it at the same time. So that's sales revenue. Now we also have this down here though, and that is the sales returns and sales returns and discounts. So these are things that have been returned, or we gave them discounts. You know, if there's a problem with it, they ordered a green one, we send them a red one or whatever it is. So sales returns and discounts, these are things that reduce the sales. So underneath here, we'll say, and that's going to reduce the sales. And the account we're going to have to end up with is called net sales or net sales revenue. It can be net revenue too. So 2,500 minus 50 is, was it 2,450? Yep. I'll make those red. C is just our cost of goods sold. Make that sea green. Okay. And these are those are goods that left the place. Well, we just covered a whole bunch on those. Yeah, so those are the goods that left the place. And that will give us our gross profit. Drop that. $11.50. Okay, so our sales revenue minus our cost of goods sold is our gross profit. This is exactly like we did before. This is our sales. They return some stuff, but this is what we sold. This is our cost of goods sold. This is how much we made just on selling the goods. Okay, I'm gonna move my O up here. Okay, operating expenses. Operating expenses come in two flavors. Get rid of that out. Selling and administrative. So operating expenses are your selling and your administrative expenses. Okay, so coming down here, we have our selling. Let's make that blue. And administrative expenses. So you see what we're doing. The cost of goods sold are goods going out. These expenses are all money going out. But we're going to separate those out so that they put them kind of in different categories. Okay, so this is selling expenses. Uh, 270. So money going out. Oops, wrong. This will get us our operating income. And so what we're going to do is take so 1,150 minus the 470 gives us some number. Oops. 80. So this is the operating income, and that's actually a very important number. We'll talk about that in a little bit here. But this is a lot of times people who analyze companies, they really look at this number even more than the net income. Okay, other revenues and expenses. Let's see here. this loss on sale of assets. Again, those are usually long-term assets we're talking about. And that one. Anything that has to do with interest is going to go in there. So coming down here, we'll say loss on sale of assets. Negative 60. Interest expense is negative 15. And be careful on these because these can be, some of these can be plus, like this interest income is a plus. Yeah, so these are all things that they did happen, but they're not really whatever they do for, they don't say what we do for business here, but they're not really what we, what they normally do for business. So this would be our total. This will fit or not if I bold it. Hey, it does. Okay, so let's do underline. Okay, so negative 60 minus 15 plus 25. A lot of times, just to keep myself from getting confused, I'll do the pluses first and then subtract out. So we have a positive 25, so I'll start out with that. And then say minus 60 minus 15. So the total is minus 50. And again, this one's tricky because it, they can be pluses or minuses. So it's a little bit trickier than most of them. Most of them are just minuses. They're costs or expenses. Okay, I gotta move my T down here. And so this will give us our income before taxes. So 60 minus 50, 630. And lastly, we'll have income tax expense. Wow. Well, it certainly gets your attention. I wish they made more colors. I mean, this is like a ridiculously small palette. I know. We'll make it a different color. How about we'll make it. I don't know that color. Whatever that color is. All right, and that will give us our net income. Will be the 630 minus 75 equals 555. And that'll be our net income. So it really is the same thing we did before, except that we have them in these extra 4 categories here. You know, the expenses and costs are these 4 categories. The sales are the same. This is money coming in. These are basically money going out. You might have a little interest income or something in here, but for most of it, this is money going out. And then what you're left over with is the income. So it really is the same thing. It's just that we kind of put it in a different order. So we kind of lump those things together that are similar. I'll make that blue. Okay. Okay, now here's what I'm going to tell you guys, and that is this. This operating income. This is what many people who analyze companies will focus on because this is what the company is in business to do. So this operating income a lot of times is a very important number, and even more important than this net income. You know, the net income has all these things that are not really related to the business. You know, I mean, they happen, but they're not really what they're in business to do. And the income tax expense, the tax code is just, you know, they don't have much control over that. They might plan for it a little bit, but you know, you really don't have too much control over those things. So these are kind of things that are not really too much under the control of management. Whereas this is kind of what they're supposed to be doing. So, you know, if this is a Ford Motor Company, you know, this is what they make out of selling cars. They have this other stuff here too, but this is for selling cars. And that's, if you're looking at, you know, the Ford company, you're gonna say, okay, how are they, you know, what are they doing with selling cars? Okay, that's what we're mostly looking at. So a lot of times this operating income number is many times considered the more important of the numbers. Any question on that thing? It really is exactly the same income statement we had before. We had revenues minus the expenses and the costs. It's exactly the same. Money coming in, money going out. The money going out now, though, is in 4 categories: cost of goods sold, operating expenses, other revenues, expenses, and then taxes, tax expense. And the reason they break those up again is that really the first 3 ones are the most important: sales coming in, cost of goods sold, those are goods going out, and the operating expenses. Those are the most important ones. Those are the ones that are really tell you whether this company, you know, how well they're doing in their chosen business, whatever it is. And the other 2, they obviously happen, but they're not really related necessarily to what they're doing. You know, what they're building their cars or selling pizzas or whatever it is. So we're kind of breaking these up into different categories so that they give more information, basically, to whoever's reading it. That okay, you know, this what goes into this operating income that's important, more so than say the other revenues and expenses and all that kind of stuff. So that's why we're kind of breaking these up. And again, it's to give people a better understanding of what's going on with the company. And for the same reason we talk about, you go into a grocery store and you want Cheerios, you go to the cereal aisle, same thing. People know where to look for you. They know where the selling expenses are. You know, they know where the cost of goods sold is, all that kind of stuff. So same idea that, you know, we're simply taking those same costs and expenses and splitting them up. You know, cost of goods sold, operating, other, and then income taxes. Okay, let's go do another one. A very similar one. Number 14. Funny space. All right. Not sure what I did there, but hey. Okay, so this will be problem 14. And I will be quiet for a little bit and let you guys work on that. And again, scoot thing. And by the way, just so you guys know that, if, especially those of you that are going into accounting, I would teach CPA review classes, and we go over this because on the CPA exam, a lot of times they'll have income statements. That's, you know, you basically put it into this format, this scoot format, or they may ask you what are the operating expenses, what are the other revenues and expenses, and that sort of thing. So even though this might seem like you're in a you know, the first accounting class halfway through it, this is stuff that they actually put on the CPA exam quite often and extensive.
Hey, Professor Taylor.
Yeah.
Can you tell me how to incorporate the line under the letters like you do with Excel
These,
or in Office Writer? Yeah.
I just click on this the little underline thing here.
Okay.
Yeah, yeah. I don't know what they are. I'm sure there's a word for it. That thingy, just the U. Yeah.
All
Uh,
right. Thanks.
yeah. I wonder, you might be able to even do it like a right click. Does it allow you to do it?
Yeah. Then that menu comes up.
Okay.
Yeah, it works that way.
I don't see it. I don't know. I'm not an expert at this stuff by any stretch. As you may have noticed as I go through here, it's okay. So let's see. Now be careful. That's a gain on sale equipment, so that'll be a plus. I can bold that. Yeah, I can. All right. 40. Plus 56. And so let's give her their income before taxes. All right. Now this is a plus though. 282. Two, 202. Yeah, any question on this thing? Okay, I think we'll go ahead and take a break then. But before we do that, we'll pull the practice exam part 1. Ooh, wait a minute. Okay, and on there's 2 parts to it, part 1 and part 2. And this piece is a little funny here, but so basically on the first page here we have a I'll let you, we get a chance to vote on these. So this will be a but a couple of things I want to highlight just before we get started on it, and that is this: so these are both FIFO on this first page. And I'd also like to highlight that the first one is the cost of goods sold. And the second one is the ending inventory. So they got the same data. You'll notice this data is the same. You can do these both at once, actually. It may be quicker to do it that way. But the first one's asking for the cost of goods sold, and the second one's asking for the ending inventory. And then on 3 and 4, I apologize for the spacing on these. I'm not sure what I was thinking, but they're using the LIFO method. And they're asking for, again, the cost of goods sold. Did I do this right? I didn't do this right. I highlighted those differently. I shouldn't have done that. I'll fix my highlighting here. So the first one is the cost of goods sold, and the second one is the ending inventory. So be careful on those when you go through them, and that the problems are the same, but they're asking for cost of goods sold and ending inventory. So there's 2 different things here. You look at them, you say, well, these are identical, and they are, except for what they're asking for. And I'll go ahead and put the poll up for that. Now the poll, I think we only have 7 multiple choice questions on this thing. Yeah, okay. So the poll, there's going to be 10, and so 3 of them you're going to have to answer will be no question exists. So 8, 9, and 10. You can put anything you want in for 8, 9, and 10. So okay, we'll go ahead and take a break and come back and we can start filling these things in. So let's say, move this over. I'll put it above here, I guess. Say 7:15, and you can go ahead and start working on it anytime you want on these. So we'll do the poll thing where you get extra credit points. Why does it let me do that? Oh, well. Sorry, my mic was off. As you're working through these, you came up with this, and that is that you had the available was 100. Any inventory was 32. So those are what was not sold. And so 68 was the number of sold. So you the cost of goods sold was 68. And the ending inventory is going to be based on the 32, whatever is left over. And I'll give you another hint here, and that is whatever you come up with for these two, the ending inventory and cost of goods sold, they should equal that. You know, so some of these were sold, some of them weren't, but those two together should come out to be the same as the 2,000. So there's you can kind of check your answer a little bit because these two should add up to that. Hmm. Okay, are there still people that are still working on this? If you are, that's fine. I just want to make sure that because if you're not, you can go ahead and post the results. But I want to give everyone a chance to make sure that they get the.
Professor, what did you mean working on this? What do you mean?
Well, you're going through an answer. You're going through and picking the multiple choice ones, working out the problems, and then we put them in the poll.
Oh,
And you guys,
I didn't have one display.
you didn't get it in your email.
No. Let me check real quick. I had it open. It should have rang. No, I didn't.
Okay. All right. Let me send it out again.
My bad.
No, it's not your bad. Let me stop sharing here for a second. All right. I'm gonna do two things. I don't think I put this in the.
You want me to take a look at the blackboard?
Yeah, I'll put it in the course files just to but then I'll also send it to you.
All right.
Yeah. Okay. The Tier 6 practice exam is in the course file. I'm also going to resend it here.
Oh, okay, now I got it.
Yeah. Okay.
Thanks, Professor.
No problem. Yeah. I'll put this. But I'm going to reset it because I think some other people may have not have got it too. So it's. Sorry. I just sent out the practice exam part 2. So if you want to take a look at that, you can while we're finishing up here. And then this, I'll also post it online here in a second. Okay, so part 2 is already in Blackboard too. Is anyone still working on the multiple choice questions? Need more time?
Yeah.
Okay. 2016. It's 5 years old. Hey, that's when I was born. Okay, is anyone else still working on it? And by the way, just so you know, these are done anonymously. So you know, well, first of all, there's no, there's no, it's not going to affect your grade if you put the wrong answer in on the poll. But I also give extra credit points for how well the class does, and usually the class does pretty well. So, is anyone else still working on it? If you are, you can either say it or you can put it in chat. So put it in chat if you're still working on it. You can private me in chat. Okay, I'm gonna close the polling if there's no one else working on it. If you are working on it, let me know. I'll give you a few more seconds here, but or you can put it in chat too if you want. Okay, I'm gonna go ahead and end it here. Okay, there are the results. Number one, 1340 is correct. Put it in, how about blue? So you guys got that one right. B. Oh, I should put that in green because it's go along with the cost of goods sold. All right, ending inventory. B is correct, 660, and I'll go through these. Later on, so this is 660. So those are correct. So the first one's in or the first one's sold. So you start out. Now, the first one's in, first one's sold, go with the cost of goods sold. The ending inventory will be, the ones that are left over. So the first ones were the first ones sold. So most of you guys got that. These were the ones that you go to first. And what's ended up not being sold are the last ones. Okay, let's see here. Question 3 and 4. This one is absolutely right. The entire class got that one right. And question 4, 1620 is the correct one. You guys got that right too. So you guys are doing very well. 4 for 4. Yeah, these last ones are the tough ones actually. I think are tougher. Question 5, one of the tougher ones, I think, and that is correct. You guys got it correct. Let's see. FIFO inventory is based on the latest, the ending inventory is on the latest ones purchased. Yeah, the latest ones weren't sold, right? The first ones were sold. So the last ones were the latest prices. So that is correct. Number 6. Oh, tough one. You guys did it though. Cost of goods sold. So we're saying that the last ones in are the first out. Last ones in are the first sold. So cost of goods sold had the latest, most recent cost. That's true. It will have the oldest cost in the ending inventory because it'll be the first ones in. And those first ones in could be 50 years old. That is one of the problems with LIFO, is that the first inventory oftentimes will never get sold. So, yeah, that's a tough one. But you guys got it right. The last one. And you guys have them all right. Very good. So this will be +4. Exam. Excellent. I like this polling thing. I don't know. It gives you something to do, you know. Yeah, and these the only quirky thing about it is that you have to set it up ahead of time, and so you know you have to know how many questions you're going to have and all that. Okay. Okay, so that's the first. I tell you what. Since you guys got these right, I will go over them, but I'll do it after class. So after we finish up part 2, I'll come back to this, and if you want to stick around, I have no problem going through these. I just don't want to. I don't want to do it if a lot of people have already figured it out. So we'll jump into part 2. Okay, so cost of goods sold, 2016. Lots changed since then, but you know. All right, so I'll do the cost of goods sold first. So we sold 230. Okay, so we need to find the cost for 230 units. And this is first one's in, first one's out. So first one's in or first one's sold. So we'll first we'll go to the 80. Take 80 of those. So we still need to find the cost for what, 150? We'll go to the January 10th purchase. You know, I should just copy these, right? That'd be quicker. Save everyone time. Okay, so we found the cost for. And we don't need all 90 of those. We only need 50 of those. All right, so basically, let's see, these are gone. Those are gone, never coming back. These are gone, never coming back. We sold 50 of these. So there's still 40 units left. At 22. So this is all that's left over. All right, so coming down here, these first ones had a cost of 25. What else did here? Pull some number. And these down here, we had times 32. What is that, 1,500? No, 1,600, I'm sorry. I checked. Okay, so this will be our cost of goods sold, all those together. All right, so let's see, 2,000. What, 6,400? No, I shouldn't have made those the same color. Make them yellow. Okay, and the ending inventory is the 40 units at, copy that. It's 40 units at 32. There's no other layer there, so. Oops. Oh, I lost my 2. $12.80. I'll fix it up here in a second. Oops. And so this is the, so these are the goods that were sold. What did I do here? I goofed something up. I know. Okay. Yeah, so these are what were sold, and the FIFO relates to the cost of goods sold, not the ending inventory. The ending inventory is what was not sold. Goes on that thing. Okay, in the interest of saving time, I'm going to copy my doodling down to this one. And these are not the right numbers. Okay, first in, first out. So the first ones that were in were the first ones sold. So this will be the first one sold. And we will take all 90 of those. Get rid of all these down here. Okay, so we sold 90 units. All this. Hey, it's not. Oh, there we go. I'm sorry. There we go. See you guys. 7, 8 minutes later, and I got it. All right, so those are gone. Not coming back. Next layer from the 10th. So wait, 230 minus 90 is what? 140? I better do the calculator. Yeah, 140. Okay, and then we had a purchase of 100 on January 10th. I guess it's the same as before, right? The middle ones got sold in both cases. So those are gone. They're never coming back. Utility find the cost for 40 of them. And so we'll go down to the first one. We don't need all 80. We only need 40 of them. So here we don't have 80 units. We sold 40 units. Which leaves us with an unfortunate 40 units at $25 each. So this is the ending inventory. Okay, so we have to start plugging in some numbers in here. So this would be times. The first ones were at $32. This one, I should have just left it because that one's gonna be the same. $28. And this one will be $25. Yeah, 1,000. 1,000. Yep. Okay. So the total will be 1,000 plus. Ah. What's the square root button? Okay, so 2880 plus 2,800 plus 1,000 missing a 0. 6680. Ending inventory will be 40 units at, actually, let's see right here, 25. It's an unhappy coincidence that these two are the same. It's just that's just the way it came out. There's no, these 40 are sold, these 40 are not sold. So of that 80, 40 was sold, 40 was not sold. So these are the not sold ones. Excuse me, these are the sold ones. I just bored myself again. Okay. Oh, so that's it. All right. Any questions on that?
I have a question. How did you get the ending inventory of 1,280?
Oh, for this one?
Yeah.
It comes from up here. That this is the first in, first out. So these were the first ones that were sold, and what was left at the end was 40 units at 32.
Oh, okay.
Yeah, so in other words, 40 of the 90 units, 50 of them were sold. So 40 of them were not sold. I should probably check that number just to make sure. 40.
Okay, thank you.
Yeah, that's it. Yeah, so these are in that, yeah, all on the same screen. Conserve a little space here. So yeah, so these are the ones that were, and these were not sold. Hey, what happened? I don't know. Oh, there's some weird kind of thing going on here. Okay, well, okay. Regardless of my inept Word document. Yeah, so 32 were not sold. And these should all come out to be the same in total if you add them together. So 6,400 plus, what is that? Because that would be the available. So 1,280. That equals 7,680. So in total, those two, should come out to be and so this would be the available. Now it should also work for the other one. It should come out to the same amount if they're using the same. So cost of sold was 6,680. Yeah, so you notice that the available will be the same for both of them. It's just you're just splitting up what was sold and what was not sold. That's why they'll actually call this an allocation. They'll say, okay, this is actually allocating, of this 7,680, how much of it gets allocated to cost of goods sold, how much gets allocated to ending inventory. Question on that? So go back to it. Okay, so I'll send out an exam by tomorrow. I might get it done tonight. If I do get it done tonight, I'll send it out tonight. But I'll still give you the extra day. So it'll still be due Wednesday. What am I on Tuesday? No, it'll be due on Thursday of next week. Yeah, Thursday. So that'll give you. I should do a week plus 1 day. So if I send it out tomorrow, and if I do send it out tonight, it's gonna be pretty late. So you really won't have today anyways. But anyway, it'll be due on Thursday. Whatever that was. Oh, do I still have it up? I do not. April 8th. Yeah, so it's the Thursday, April 8th. Yeah, any questions? Okay, if you see the side of my head. No, if you want to see, if you want me to stick around, I'll go over how we got the multiple choice question ones. So the first, yeah, the first ones. I'll go over those. So anyone wants to stick around, you do not have to stick around, and if you already know how to do them, there's no reason for you to stick around. But if you want to stick around, I'll go over the first part one, the 1 through 7. I'll go through those first 4, at least the FIFO, LIFO ones. Any questions? Okay, well, you're free to go. So I'll say goodbye to those that want to that need to go and already get the problems 1 through 4. And then I will start in on problems 1 through 4 for those that want to see it. Okay. All right, so let's take a look at this one. Okay, so part 1. We need to find the cost for, we sold 68. So you need to find the cost for those. Okay. Oops. All right, so we need to find the cost for 68 units. FIFIN says the first one's in when the first one's sold, so we will take July 1st beginning inventory was 20 units. So we take those. So these are gone. They're gone, they're never coming back. Okay. Okay, so we still need to find the cost for some more. Okay, so the July 1st beginning inventory, we had 20, we get those. So we still need to find cost for 48. Purchases on the 7th. Now, the purchase on the 7th, you'll notice that there's 70 in there. Well, we don't need 70, we only need 48. So we'll take the 48 that we need. Yeah, they're gonna look kind of stupid, but now, so from this layer, we sold 48 units. Which leaves us with oops, a little too far there. Let's say minus 48, 22? Yeah, 22. Okay, so spacing on this is a little kooky. Okay, so this is what's left in our ending inventory. Let me get rid of this one. So our ending inventory, we have that. Coming down here, what do these things cost us? Well, beginning inventory had a cost of $19 each. Equals 380. $48 at a cost of $20 each. $960. And so our cost of goods sold be those two together. 380 plus 960. 1340. Now, when that's for the ending inventory, you can do it one of two ways. You could take these two, 22 at 20 and 10 at 22. And so let's get our ending inventory. There actually is another way you could do this, though. It has to do with this. If your available is 2,000, you know, if that $2,000, if you sold 1,340 of those, so that would mean the ending inventory would be, you know, so truthfully, you really only have to do this. You say, okay, if we sold 1,340 of that 2,000, the rest of it all has to be, you know, this is what was not, so this is what was sold, so this is what was not sold. So you could actually just, you know, subtract that out, be the same thing. Okay, down here, everything's exactly the same, except that we don't do FIFO. We use LIFO. Copy my stuff to save time. You find a cost for 58 units. You're going to go to the last ones in first. Take the 10 units. $22 each. Next place you're going to go are July 7th. See, I didn't erase those, but we need 58. No, 1,160. So again, we're just taking the last ones in. And so here we're going to take 58 of those. And so these are the ending, that's the ending inventory. We still have all of them from the first layer, and there's still 12 from the 7th. Now coming down here, truthfully though, you could say, okay, my cost of goods sold was 1380. So if that was what was sold, what was not sold? So ending inventory, that would be 13,620. Yep. Let me get these closer together. So that would be your ending inventory, and that is what we have here. Now, you could also multiply it out. So 20 units times 19. Twelve units times 20 is 240. So that would also be so you can multiply it out. So this is one method, or you could simply say, okay, if we had 2,000 available and we sold 1380, the rest of it must be, you know, whatever you subtract, it must be whatever's left over. So these were sold. So these were the ones that were sold. And these were not sold. Question on that? So yeah, truthfully, yeah, if you wanted to do it this way, yeah, there's nothing wrong with doing it. And I think that's basically what they do. I mean, the not sold is basically this, right? Okay, any questions? Oops.
No, thank you.
Okay, and so this will be posted by midnight usually. We'll see though. But anyway, it depends on YouTube. So, okay, well, have a good evening.
All right, you as well.